Hey, morning everyone. Welcome to the room. As you know, trading futures does involve risk. It's not suitable for all investors. Information in the presentations for educational purposes. It's not a trade signal service, not intended to be financial advice. Hope you guys are doing well. We had home price index before the bell here. And then at the top of the hour, news-wise, you've got consumer confidence and jolts, so that's going to be one we want to watch for. Not so much what the reading is, but just don't want to put on a trade right at the top of the hour. Not going to have much of a gap up, so more than likely won't have any 15-minute opening range breakout. Yesterday's didn't really do anything. We were in this kind of crummy tight range for a good chunk of the morning. This would be the 30-minute range. We actually had quite bullish breadth in the advanced decline line. We had gapped up, so even though we sold off a little bit, we were still up from the prior day. But even when we were trading down below the 30-minute low, my ears are getting blasted. Even when we were trading below the 30-minute low, we had like a 4-to-1 breadth. There was a little double bottom in here. I think it's not super little, but you can kind of even see it here on the 15-minute chart. Wasn't a perfect double bottom, but once we traded back into the 30-minute range, we went right to the other end. And so that's one of the really important things about the 30-minute range is if you are outside of it, so the 30-minute high and low is marked, and then you get outside of the 30-minute range that I have shaded here. If you go back into the range, there's a very good chance that you're going to go to the opposite end of the range. And then when you get to the other end, if you can't push out the other end, then you're rejected and you just fall back to the other end of the range. And in this case, we kind of fell back down to those lows and then went right back to the other end. So, extremely range bound yesterday. Hence the definition of, that range day. Our breadth opening at 1-to-1. We've already filled our gap, so no 15-minute breakout today. If we go way out here, I'll go even out to a weekly. Here we come back settling down towards our larger trend line. It's quite convenient that we had been talking about, when we make these really steep trend lines, like back here, then you're not going to go up, you're not going to go straight up like this, not quite 90 degrees, but, much steeper than this 45-degree trend line. Then you start to work your way kind of sideways towards that shallower trend line. And if you go back to June, to where we are now, it's basically straight sideways, even though we went up more. It's not sustainable to go straight up like that. Fib-wise, we got the extension long here, high to high. This 4067 is a potential future pullback just from lows of kind of this run up to highs. And I also have the opposing short drawn from high down to low is kind of, that's kind of what I'm looking for us to lift up here. We've got 1, 2, 3 weeks till the start of the next Fed meeting. So if we run up, Monday will be a holiday, so Friday will probably be slow. So if we could wait till middle of next week to make it there. Now we're 2 weeks out. from the Fed meeting, and you could use that as an opportunity to buy puts ahead of the meeting. Maybe the week before we get a bit of a sell-off. It's kind of in the pattern this summer, as opposed to being really quiet up to the meeting and then getting like a sell-off the day after. We've kind of been getting a sell-off the week before, so that's one scenario we can work with to buy some puts. Otherwise, we haven't had a close below this extension, 43.70. And then the daily chart, that's, as we talked about, really important to get a close below the 61.8, not just a pierce of the 61.8. And anytime you're looking at a chart, the candle only has meaning, well, the candle shape only has its meaning once it's fully closed. Because like this hammer here, if you were looking at it in the middle of the day, this would be a big red bar. But then we rally into the close and it forms, more of a hammer shape. So you don't want to look too much at the daily chart intraday, because the candle, that developing candle, doesn't really mean anything yet. If you do have questions, you can drop them in the question box there. Otherwise, we'll see what the market gives us here. This guy is a little too early to take a hammer. Didn't really have anything yesterday. Not much on the 1 minute, and there's a little retracement right towards, actually it was a little past the end of the session, but I didn't bother with it. You can almost think of the first 15 minutes as like your warm-up. Not quite in the same way that you'd be like practicing free throws or executing in small chunks of what you're going to be doing, but it's like your warm-up for your mental warm-up, your observations, and you can practice drawing some retracements and things along those lines. You can take our first little high to low. You can draw that, and you can say, okay, yep, we failed that 61.8, so then we would come down here and draw from low to high once we pull back. So I guess you're getting a few reps in, but it's more so to mentally get warmed up and prepared. Because even if you look at the pre-market, you can go and look at the overnight session and see what we were doing leading up to the open. But there's really not a ton to be done. You can, if you are trading the pre-market, you can try and take a little trade towards the gap fill. So that would have been like down here. So then if we're an hour before, maybe not the best case today because we did, even an hour before, we didn't have much of a gap, but you got a little bit of a inverted hammer here. On the 1 minute, you could try to get in. Um, Probably a couple retracements, but um, up until that hour or so before the market opens, volume's still pretty low. Like in the overnight, you got the European Open. Um, that can be decent for volume, but for most of us, that's while we're sleeping. Now, with today having filled the gap, I'm going to be a little bit careful with this first 15 minutes of of 1 minutes. You've got this really long tail here, and then on the top, really long topping tail. This little halfway back long is going to be right at the 50 here. Well, this little hammer is going to be right at the halfway back long, is what I should say. But we're still awfully close to um, the close, and our breadth is 1-to-1. Our advanced decline line is flat, so it could be a pretty tight range bound open or morning like we saw yesterday. So don't want to get too aggressive when there's just not many opportunities. Last Tuesday, there were lots of 1 minute trades, and there were lots of opportunities being thrown at us, and it didn't take a lot of energy to find them and make those trades. So we want to take that same mindset and make sure that we're not just forcing things because we're eager to trade or we're bored. I'm going to mark this high from a couple days ago, Thursday, just because it's kind of the most recent swing high. And when I'm zoomed in to the to a 1 minute chart, it's going to be hard to see that on the left. So that will at least be a reminder for us. Yesterday's high is just over here, 49.50. Anytime we start to trend and the breadth is, close to 1-to-1, I keep a good eye on potential counter trend trades. So like here, we went up to negative 60, 1/8. Kind of looking for this guy to form a little hammer. Inverted hammer, rather. And we're not going to get it. Now I'm kind of forming a bull flag here. As you move sideways, probably break to the upside. That's why it's important to wait for the swing low to break before going short. I was seeing this little double top here. Maybe we could have broke the swing low and taken a short, but nope, didn't break the swing low. Ripping. It looks bigger than it is. I mean, these candles are only 1.5. It's not monsters. But we've got our consumer confidence here in 15. kind of still in a bull flag, but if you've heard me say, if you get beyond, the fourth bar, that that bull flag is really starting to lose its strength. You want the pull and then 3 bars, sometimes 2, 3 bars, and then the next bar to break it to the upside. Nope, no 15-minute breakout today because we filled the gap right at the open. So there won't be any 15-minute play. We're in a low tick here off of this hammer. Close to highs, but that's one where you could kind of take it or leave it. Don't have a strong preference either way. The low tick gives it a little bit of strength. We still have enough time between the top of the hour news that it can trade away and get you in a locked profit situation. But slowing down a little bit up here, as you can tell, over the last 5-6 minutes. Looking at a 54.25 as a short here in about 10 seconds if this inverted hammer holds. 54.25. Okay, not filled yet. They've got the order sitting there on 54.25. This poked before I let go of my order. Let's see if it goes again here. Yeah, you could say, well, it triggered, so I'm just going to pull it up to get a better price. That's fine. There it goes. Doesn't really matter, but all right. Let's see if this wants to drop at all. We got a couple of minutes here, so enough time for us to get our stop moved before that number, like I said. And see how I drew this nicey tick down trend line here? We're coming up to the trend line and then getting lower highs. That was another read. Okay, let's move our stop. 44.55.25. Yeah, these are the hardest ones to get in when it closes at the low and then immediately the next tick breaks the candle's low. So you just do what you can. I'm hovering my cursor over the trade ladder um, as I'm looking at the clock in the top left, and I hover my cursor over the trade ladder. Sometimes I hover it over the price until like 10 seconds to go before the candle is closed, and I see the low price 54 and a quarter, and I can hover it over the trade ladder, and if we do drop another tick, then I know that we went down a tick, and I can move my price down a tick. But sometimes you just close at the low of the candle, and then as I'm letting go of my order, we have traded there and then gone up. So all right, now we're going to go down to a 54.75 as the stop. So not quite break even yet, but getting closer. It'd be nice if we could break this 61.8 here, and then, or at least just hold the high of this candle. We're getting inside of, just about inside of 3 minutes of this consumer confidence number. So we're going to be moving, hopefully moving our stop to 53.75 in about 15 seconds, the high of this candle. And then if the next candle opens and drops lower, then you'd really have a nice move of your stop. So, oh, maybe some news leaked here. 53.75 is the stop now. And if we go down off of this consumer confidence number, maybe we'll catch a nice break. If you want to close half here, that's okay ahead of a number. Um, when you get a little spike in your direction, um, that's the benefit of having multiple contracts. You want to make sure your reward to risk is good. So at least, in this case, the candle size is 2.25. So by the time you account for your entry and your stop, that candle size, add 2 ticks, so 2.75. So you at least want to take off, about 3 points of profit to offset your risk from the start to make it 1-to-1. But we're not going to be able to move our stop because this big body candle here, you're going to have to leave the stop at 53.75. This is an inside candle, and this one's starting to be as well. And you could get something. Our extension has broke on that little move down. We're kind of bouncing off of this 50, which usually wouldn't be the case. You'd usually draw the full halfway back, but we'll just draw it like that temporarily here. You know what? Let me get rid of that and just have this opposing, just have this short drawn up. You may get a tick or two of slippage if we rip here through 53.75 is where the stop is. If it just spikes, but usually no more than 2 ticks of slippage. And look at the nicey tick, still holding this nice downtrend. So that was another reason of taking this 653 inverted hammer lined up with this series of lower highs in this downtrend. All right, here we go. There it goes. All right. So yeah, when it comes to like exiting with multiple contracts on the or the 1 minute trades, eh, I typically trail the whole thing, trail all the contracts. I don't do any first targets. Um, but if you get an occasional spike that you want to close out of one or two contracts, you can certainly do that. You just want to make sure your reward to risk is at least 1 to 1 off of that initial candle plus 2 ticks for the entry and the stop. Pretty strong break of this downtrend line up to a new high tick. Let's see if we get tick divergence here, meaning the price goes higher than the high tick. Yep, there it goes. Was our, yeah, getting close to that swing high from a couple days ago. I wouldn't want to jump in. This candle is going to be kind of big. Like if this formed an inverted hammer here, right on top of, like coming off this news number, might be a little bit too quick moving. Well, 60 and a quarter. You could try. It's going to be pretty fast moving here and might be all over the place, but kind of in this bull flag territory too. It's we'll see. You want to give it a little time to settle out after the news and not just be so reactionary. And we do have that tick divergence, top of the hour. Our 30-minute high is going to look like that. So we are well above the 30-minute high. Yeah, pretty messy up here, or at least just consolidation, so good to not get overly excited right on top of the news number. This guy's looking a little bit better. close to negative 60.18, a little smaller candle. Let's see if it turns into an inverted hammer. So 63 is the current low. Nope. No go. Inching close to that high from Thursday. I got my eye on here. Maybe another one here. So 44.64 and a quarter. It's going to drop a little bit. And it's more of a spinning top, 64 and a quarter. 50-50. It's not, technically it's not really an inverted hammer. But we are at the negative 60.18, near this high from Thursday, so. Yeah, nope. Not much here on the 512 tick chart either. You know, there's a couple little retracements, but they're longs, and we're up against highs here. Our 30-minute is down here. We haven't had a bigger pullback to look for some longs off of, you know, a larger halfway back for the day, something like that. So just kind of in limbo at the moment. So we do still have a tick divergence, meaning our high price has been higher than our high nicey tick. So we could keep going higher. I guess our first counter trend short would look like this, 44.64 and a quarter. So a little bit of mixed signals with a tick divergence, a little bit of a pullback, not really any major support um, level coming into play, but even if you take from down here as a retracement. So 64 and a quarter is really our first short opportunity on the fibs today. Could do the extension like that as a small level of support, but feels a bit forced today. At least drawing up some of these, searching for some of these retracement trades. There just hasn't been much presenting. I don't like when we come down, like if here if we make a double bottom and then move up to the 50% short. That can kind of get too much momentum off the double bottom and push right through the 50. So I'm gonna leave this drawn up, but I don't have my my order at 60. It doesn't matter anyway. 64 and a quarter. Let's look at this for a possible hammer. Kind of just in the middle of nowhere, but it's a little bit big. Down off this uptrend line, it's a 63.50. I like that the nicey ticks came down to the backside of this trend line. That's why I kind of switched to watching for a bounce because the nicey ticks came all the way off of their highs. So 63.50. But now we're kind of rising a little bit, so might start another parallel move of these lower highs. Let's see if we can push up or not here. It's not a huge candle, but this next guy, the low of this candle isn't much higher than the low of the prior one, so our stop only goes up to 61. So not much of a move. And our opposing short now didn't quite break. There we go. Okay, so that's good. Now we just need this candle to close, and we can bring our stop up to 62.50, hopefully, unless we come down and break the current candle's low, but I think we'll be safe for a breakout into new highs. Yeah, there we go. Alright, so it's going to be a 62.50 in about 10 seconds. Not much of a break in the new highs, just by a tick and then rejected, so not super bullish up here, which is reflected in the breadth. Okay, so 62.50 is where our stop is. Here's that Thursday's high. Let's really keep a close eye on this. If we punch through, by like a point, and keep moving a little bit, that would be a very bullish sign. If we come up to it and just get rejected and kind of move sideways, then more bearish. Okay, here we are. What's it gonna do? So far rejected. our candle. We got about 20 seconds, and it'll be a 65.50. That's a good move. 10 seconds. Still not much of a push above. In a high tick. Okay, 65.50 is the stop movement. This is what you want. A little candle that forms right off the top. As long as it can hold its low and not just tank here, then you can get that big stop movement. If it's an inverted hammer, that's fine, because then that's a good exit signal, but you just don't want it to come all the way down and take back this big body candle. If it can stay in like the top quarter, top third, that would be great. Because right now the low of this candle is a 69. So we'd be moving our stop up to 68.75. That's a 3-point move off of this low here. So let's give it, so we already have a, let's see, 16, not quite a tick divergence. We're still at a high ticket highs with a double top. So we need this thing to close so we can get our stop moved. 5 seconds, 68.75, go. All right, sweet. Those are the best, the best points in the trade where you can get, that big move. The next candle forms, closes, and then you get your stop, way up above your entry price, and still a little bit of room here. This high tick is holding at 716 so far. Oh, well, guess not. All right. Well, let's keep riding this up. 15 seconds, and we're looking at a 69. So I'm basically I hover over the candle, and then I look at the low price just above it here, and that's our next stop move, 69.25. Yeah, pretty sweet. Stuff works really well. So 717 now, and 717. So we're getting a little toppy up here with these high ticks at highs. I'm just going to keep trailing as best I can here, but if this moves sideways, we might be able to stay in as long as this candle doesn't break its low. Gotta go run my dog on the concrete a little bit. Her nails are getting long. Click, 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 click all around the wood floors on the house. So no stop movement here because this is an inside candle. So you gotta leave it at 69.25. And we do have that high tick at highs, and it's a very high tick, plus 1,000. So we're kind of in a bull flag up here. It's more of a triangle. At least the start of a triangle. Let's see what it wants to do. Same thing, no stop movement because that last candle was inside. So broke the high. We're also going to have broke the, already deleted that one, the gap fill from, or no, that was down there. So there was no gap fill at the top. Closing in on that 92. That is nothing. It was kind of an extension. See how here's our 30-minute high, and we broke through it and never retested it. So that's the 30-minute range is probably the most useful, you know, two lines you could have on your chart if you're intraday trading. Otherwise, I really don't put many lines on the chart. This was that high of Thursday, which we broke. So we're getting a pretty good triangle here, which is a good sign for a continued move up. Anytime you get a triangle, you got to go back to what was the trend before the triangle was forming. And so when I say triangle, I just mean we're getting this shape of a triangle, or pennant, you could call it. But then you can say, okay, well, what was the trend before we formed that triangle? Well, it was up. So that's the direction we shouldn't break out of this triangle. So my stop is still down here because this is the candle that made the new high. None of these candles have made a new high yet. So we have to wait till one of these pokes above this candle's high, and then we can put our stop underneath that candle's low, if whatever the new breakout candle is. And that kind of stop placement, there we go. So that stop placement, this is a double top. I'm going to go ahead and use that candle. So 71. I know we've already gone higher, but hopefully if this candle can close, then we can really move our stop up closer to like 73, but we will see. So tick divergence now, meaning we have a higher tick, higher price than our higher NYSE tick. But you can use the same trail stop approach on daily bars, any time frame. It's fantastic. $10 we'll be looking at a 73, 44.73 as the new stop. Okay, 44.73. So you see how easy it is. I mean, once you get in the trade and get away from your entry, by a couple of candles, your stop is, locked in profit zone, and you are literally just, okay, what's the low of the next candle? Boom, next candle, boom, until, you come down and get taken out. And there we go. Not quite an inverted hammer here, spinning top up at highs, but not gonna flip that one. So that was a great one. 73 from a 60, 75. 63.50, excuse me. So about a 10-point move. Not too bad. You do that with one contract, it's $500. So you start, it doesn't take, you don't have to be trading 10 contracts to gain traction when you trade the ES. If you're going to trade the NASDAQ, yeah, $5 a tick, a point is going to be, a tick rather, is going to be a little bit, you're going to need more contracts and it moves so much faster. I love trading the ES. And it does keep, I guess it doesn't really matter too much, but there's a little bit more barrier to entry because of the 1250 per tick. I was going to say it keeps newer traders out of the ES, but selfishly, sometimes you get a big influx of new traders, like in COVID and things like that, and there's just that many positions on the wrong side of the trade to absorb orders. So it's like this added liquidity for a veteran or an experienced trader. Um, Sometimes it makes for pretty decent trading environment because you've got so many more traders that are kind of doing the wrong thing if they're super green and brand new. But usually those periods are a strong uptrend, and that's what lures a lot of new folks into trading. And there's nothing wrong with that. Um, you just don't want to get sucked into thinking that this is how the market always works, and I can, put a bunch of money in Tesla and then look at it the next day and my account is doubled, because what ends up happening is you start trading bigger and bigger and bigger size, and then that 3, 4, 5, 6 month bull run starts to roll over, and now instead of trading $1,000 position, you're trading a $10,000 position, and you have one loss where the market pulls back, and then boom, it's all gone. This hammer is not really worth it. It's too big relative to these prior candles, and the high is too close to the high. So going to sit a little bit tight here. We've got still have a tick divergence, meaning our high price is higher than our high nicey tick. So we still could go higher. I guess we have to draw the next extension. You're just going up, up, up in extensions here. See, it's a good reason to I guess not judge a book by its cover, not assume that just because we didn't have a gap today that it was going to be a dead day. Coming in to the day, I'm pretty sure I made the comment, maybe it was just in my head, but I think I said something along the lines of, yesterday's opening range was very tight and sideways, so we want to be careful of a tight and sideways range. So at least just watching for that to protect ourselves. But then if you simply look at the chart, mark your 30-minute high, the chart, the market is going to tell you, okay, we are not trading like yesterday. We are not inside the 30-minute range. We ripped out of it and kept going. So, that one stab at the inverted hammer was a great play, but continuing now to short all the way up. There really weren't that many. This guy here that we didn't, let's see, the 701 that we didn't take. Um, you don't want to get stuck just saying, oh, the market has to be range bound because we didn't gap. I need to sell it. You want to kind of trade what you see, and when you get a pullback like this, looking at the trend that's forming, you need to be able to disconnect any preconceived notions or your own opinions that you think, oh, the market should do this. Honestly, I haven't even looked at what the consumer confidence actual number was. So you just want to be flexible and trade what you see, not what you think should be happening. Looks like consumer confidence was actually a little low. And then the JOLTS number, also a little low, which is good. But yeah, a lot of times people want to, find the reason for why something happened, and it's like, the reason the market went up on Monday, they could use that same reason for why the market went down on Friday. So don't consume yourself so much with why and trying to find out why. What are you going to do about it is the more important thing. Here we go again. And don't get too greedy. Those would be a couple of the more important things to keep in mind. So the word tight, like a tight range, is going to be relative. So if we look, what we want to look at is the daily chart. You could use like an average true range too. But so let's say, okay, roughly the last couple of weeks, these average days been about 40 points. 40 points, 45 points, 45 points, 37 points. So then on last Thursday, 88 points. Okay, that's a much bigger range. So today, right now, we are at 40 points. So we're kind of getting to the edge of our average. And so the opening, a tight opening range, yeah, could be 15 points when the entire day on average, just as of late, has been about 40. So our opening range, our opening candle was 12 points. Yesterday's I think was 12.5 as well, pretty sure. Um, so then on Friday, smaller candle, 9 points, which was actually good because we broke. Oh no, that wasn't. Was it that one? No, it was this one here. Thursday. That was a bigger candle, but we broke. One of them was. No, must have been Friday. Yeah, Friday broke to the upside. Let me look at my notes here. It was Wednesday. I don't know. Small candle on Wednesday, bigger candle. But see how quickly, like a trend day, you form that, first candle, first two candles, and then get away from them. Obviously with a trend day, by definition, yeah, you're trending. But you can get so caught up in, in zoomed in like this, you can kind of miss it. So that's where actually drawing the 30-minute high and low horizontal mark are really helpful. So getting another pretty decent lift. I'd still say this candle is a little bit too big. It's too close to highs, and relative to the last few, you're at 3.75 points. When you take a big winner, or a decent sized winner even, uh, the tendency can be to get a little loose with your entries after that, but it's still August, and sometimes it's nice to just end on a positive note with a winner like that and not get too greedy. Great question. So Steve asks about, this high to high drawing that I have. Well, typically we would be drawing from low to high. That's your traditional retracement. And look here, we didn't quite make it down to the 50%. And so we moved up well before we traded at the 50. And then we went through the negative 23.6 all the way up to the negative 60.18. So anytime we trade at the negative 60.18, kind of this faint gray line here, anytime we trade at that negative 60.18, then you want to draw from high to high, because what that's indicating is that the market is really ripping, and we're not getting these deeper pullbacks to the next 50%. We're getting what's called the extension, the high to high. So we traded at that high to high, and then now you can see we're at the next high to high here. And so, by definition, you're a fair bit extended. Today's a little what I would kind of call a runaway day, where we started with very flat breadth and advanced decline line. We just sort of ran up to our 30-minute and then got the pop off of the news and then have just sort of run away to the upside. So, caught a nice chunk of it, which is really all you can ask for. But sometimes then it just becomes like you've run so far, there's not really a high ticket highs to try and take a counter trend trade, and even so, the trend is tight enough where we don't really have a good opportunity anymore. This one back here was early enough in the day. We were kind of going sideways. That was a great short play, but you don't want to try to stand in front of a moving train unless you're kind of standing near the station. The train station is kind of like that potential support or resistance that you can identify on the chart. Okay, here's a potential place for this train to be stopping, but you still don't want to stand right on the tracks. It's better to stand, on the platform next to the tracks just in case it doesn't stop. So when we put a limit order out here at a 50%, you want to say, or you want to see, okay, is there some support or resistance in addition to the 50% so that I'm not just blindly standing on the tracks with waving a limit order flag? Yeah, these hammers and inverted hammers are really pretty special. I mean, even here, if you said, oh, here's an inverted hammer, yeah, it's a green candle, not a red one, but it still counts as an inverted hammer. Let me short below the low, any of these, this one, this one, this one. Well, we didn't break the candle's low, so there's no entry. So even if you are incorrect, even if you put an order out there and you're wrong, it doesn't hurt you. So you want to use traditional retracements like a low to high, just if you're making those full pullbacks. Now, like today, our low to high, our trading hours only retracement is going to be so far away. It would take a lot to get there. So you're always going to start the day by drawing low to high, and then if you start ripping, then you can go. And if you start ripping to the negative 61.8. If you just go to the negative 23 or just a little bit past, then you want to just keep drawing low to high, low to high, low to high. Here's a bit more of a rip down. But if you're starting to trade all the way to the negative 61.8, then you want to look for an extension. Someone's selling up here. No one else was interested in buying. So this is one thing on these, what I call the runaway days, where you have not a super strong breadth in advanced decline. The AD lines really come around, but the breadth is still not crazy strong. But there's just so much less volume that you can sometimes get these big spikes relative to what we've seen in the day because there's just not as many participants. So like up here, the buyers kind of dried up, and so a few sell orders come in that are a little bit bigger, and all of a sudden, there's a few buy orders, a few more buy orders below, but there's really not a ton, and then boom, you can get, let's say there's 200 buy orders between 76 and 81. There's 200 orders sitting there to buy, and someone comes in with a 250 sell order. All of those orders can get filled, and let's say there's 50 at 81, and then 50 at 80, and 50 at 79.75. It's like all those orders can get filled very quickly, and then all of a sudden, price is trading way down here because there's not that many orders sitting there. Yeah, that's right, Stan. I don't typically take too many extension, like a 50% of the extension. Just because by definition we're already extended. What I would do, like here, is I would look at the 512 tick chart to take the retracement. But see what ends up happening if I draw from the extension right here, 71, and then I draw up to the kind of the next swing high. I mean, that high is basically at that point was the high of the day. So if we pulled back to this 50, you would kind of have a double top. So for that reason, you kind of already missed the move if you're getting into extensions and trying to get long at the extension because you're essentially getting long near highs. And like at this point, gosh, we're already 7:40, so yeah, we're a fair bit into the day, probably not going to take. Now you kind of need like a bigger reset, a bigger pullback for us to reset longs to get moving up again. So, for all that to happen, the pullback, um, consolidate, and in turn, uh, probably not going to end up with a whole lot at this point. I'm going to get rid of this extension. Still very much in a strong uptrend. I mean, even if I just kind of connect some of these lows roughly here, as best you can, you're in that strong uptrend. So the benefit of doing a hammer in the extension, so like here, this is a perfect example. This is great, Stan. Great questions. Okay, so if we go back here to where that long was, this hammer, look at how low the high of the candle is. It's so close to the 50%, and it's relatively far away from the high at that point of the day. So the high of the candle, our entry was a 63.50, and then the high of the day was up here, 67. So whereas if you're going to draw the next retracement, you're coming up, it's something like this. So whereas the entry for the hammer is down here, the retracement, well, we didn't really get one, but let's say we did and it pulled back, you're basically up in new high territory already before the pullback. So the idea is with the hammer, you're getting in closer, especially you want the tail to be, to pierce through the 50. That's great. But you don't always get a retracement off of, on the 512, off of the larger extension. If you do, that's great, but it's less frequent. Yeah, you can certainly do the same strategy of hammers and things on a 5-minute chart. It's just going to be a little slower. Sometimes that can be a benefit. So like here, say this hammer off of the trend line, the candle's going to be bigger. So this one is 5.25. So you're looking at a 5.75 as your full stop out. The next candle is very large, 13 points, but you have to wait a full 5 minutes before it closes, and then you still end up with a 63 as your stop, which you're waiting another 5 minutes for. So it can be a little hard to execute unless you have a lot of patience and have a very good disassociation with letting unrealized gains come back. And I think that's one of the best things about the 1 minute. I never used to look at a 1 minute chart, and but there are lots of benefits. The last 3-4 years I've looked at it a lot more, and obviously been trading this low high bar, high low bar strategy on the 1 minute. And there's just a lot of benefits of being able to tighten your stop so quickly after you get in the trade. It's completely based on the candle, so it's the market telling you when to tighten your stop and get out. And you can lock in profits so quickly, and you're getting in on the trend change right away. You're getting out as the momentum is changing very, very quickly. So lots of benefits there. And it's been perfect because, the summer, the retracements are quite a bit less frequent. Not that they're not there. I mean, last week, Thursday, had a huge retracement for like 16 points. And but if I go look at my trade log, it's like I've got entire weeks where I haven't had any. I guess I've had more vacations, but 2 trades in a whole week, no trades the last week of July, middle of July, 4 trades, so not a whole lot, and that's just the retracements. So not as many certainly in the summer months. I tend to be a little more on the conservative side when it comes to taking risks. I would rather have fewer stop outs and smaller drawdowns. And the trade-off for that is, uh, I guess, smaller gains, but more consistent. Like I'm all about like got to be moving forward every single week. Like what can I do to make myself better, make keep my net worth going up and to the right. That you know clean 45-degree trend kind of thing. Um, that's a lot more comforting for me than having a huge up week and maybe a couple strings of big up weeks, but then a bigger drawdown week, and doubling the number of trades that I take, but then also having a lot more stop outs, and then having to kind of maybe dig myself out of a few more ruts, and that kind of thing. I would much rather just end the day with 0 trades and maybe quote unquote miss a winning trade in there. So yeah, this hammer, I think this is the one you're talking about, Stan. And so if we get this drawing right, it was high to high, then this high to here. If you look at this hammer, see how the tail just touches the 50? And so the top of the hammer, the entry price, would basically be right up against highs. You would really want this to be more like that. Maybe not breaking the 61.8 so much, but let's, something like that to where, but even so, the high of the hammer is pretty close to all-time highs or of the day. So, yeah, that candle is also very large compared to the last couple of candles. So now you're risking a lot for, just to get 1-to-1, you got to get almost a 4-point move. So not that it can't happen, but yeah, great observation and fantastic question. It's if you take a snapshot of this, the one that we took here, high to high, this is just complete textbook. The body is sitting right on top of the 50. You got the distance. So the candle, let's just call it a 3-point candle. You have way more than 3 points before just the high that you're anchored to. Not that you're going to take it off at 3 points, but just that your reward to risk is very favorable. Okay, I'm going to easily get a 3-point move if we just go up to the highs, and at that point I'll be tightening my stop, and then see here as we break out into new highs, your stop is already well, close to 3 points. And now as we kind of drift down, you can see we're breaking this up trend line, which you kind of, without even drawing up the full halfway back of the day, you can see that in order to get to that 50%, you would have to break this uptrend line. A short is going to just kind of be in the middle of nowhere, limbo land. Maybe you could say it would line up with some lows if you made it all the way down to the 50, but 10 minutes from the top of the hour, probably not going to have any more trades through here. 15-minute, pretty much just a straight up with this inverted hammer here, so yeah, those trades where you get in and it's just next candle makes a new high, next candle makes a new high, and you're getting higher lows at the same time. I mean, that's how you know that you're in a good trade. Um, you're not forcing it. If we were still, trying to take shorts, which at first with that 1-to-1 breath, this first short here was beautiful, and definitely take that again and again. But then as you start to get up into highs above the 30-minute high, and you have these tick divergences, all of a sudden, in a matter of less than 10 minutes, the whole sentiment shifts. You go from, okay, here we are kind of going sideways. We're right about to close the 30-minute high. And, if we would have stayed within the 30-minute range, all of a sudden, yeah, selling highs at the top of the range would be the approach. But then a couple minutes later, boom, you're above the 30-minute high. You have a tick divergence. You're moving up, and you have to switch gears. And now you go into, okay, well, we don't want to be um, we tried the 712 here. Where was that? Was it 712? No, that was the long. Yeah, so um, you want to switch gears and be, going with the trend. So here we are right at the 50 here. 2 points, 74.75 off this inverted hammer. Another parallel like that. Yeah. Now we're going to pass on this one here. This is where you don't want to assess the candle before it's closed. It's like 1 second it looks like a big body green candle, and the next second it's a hammer. So yeah, or an inverted hammer. So no inverted hammer there. Just gonna let that one go. When you get these, on the one hand, when you get these straight up runs like this, you can see a straight down move. So it's like an upside down V. A lot of times it'll be a V. It'll be a short, so a straight move down, and then a straight move back up. But we're just gonna let this peter out here. Yeah, that would be close enough, Mike. To a inverted hammer, I'm okay having not taken it, but yeah, when you're at a 50% retracement like this, you can be a little more lenient with the shape. So like this is more of like a dragonfly doji where the open and the close are on top of each other. But see what I mean about this upside down V? every single time. It's just when you get those straight up moves where there's just not much resistance up, then you just fall back down the same. So yeah, don't kick yourself for not taking it, but um, keep your eye on that when you get these 1 minutes at a 50%. See the nicey tick today. You've got these kind of like downtrends, and then you make a new spike, and you get new series of downtrends here, and then another spike, and another series of downtrends. So those are helpful to keep an eye on. So I think I'll wrap it up here. I'm gonna go out for a bike ride before it gets too hot. Um, yeah, good day. Real good questions. Good trades. I didn't have any retracements in the 15 minute, no 15 minute, and that's okay. I know today, the 15 minute probably would have got a plus 20, but yeah, 12, yeah, probably would have got there. But if you took, remember, we're not just concerned about one outlier day or even two or three outlier days. We want to look at all the days that we filled the gap, and you would be very much in the negative. Yeah, I mean the short retracement stand off of this little Dragonfly Doji, like I said, that's when you're at a 50% like that, you can be a little more lenient with the shape of the candle. So it's not a technically not an inverted hammer, but it's a reversal bar at the 50%, and that's totally fine. It's small enough. Um, I, yeah, I just It'd be it could be 50-50. You take it or you don't. It's not the end of the world. So that would be, I would say, out of all the, really, we haven't had very many retracements today, but that's one of the um, better here. Oh, off of the 5 minute. Let's take a look at what you're looking at here. Are you referring to like this swing low? Not even that. Um, yeah, I'm not really seeing a good 5 minute retracement here. The short is what you mentioned, I thought. Um, and like here, you could draw up a retracement in the 512. That one, the low is too close to the low back here. So by the time you draw up the retracement there, you're kind of in a double bottom territory. So anyways, yeah, good questions today. I'll pop into Discord later if you are chatting in there. You can drop in and answer any questions. So hope you have a great rest of your day, and I'll talk to you all soon.